Some weeks ago, we talked about SAP Inter-company STOs, but today we will make the opposite scenario, so we will do the returns, as it was also requested by many of you. See you. Have you seen my last video? It was about SAP automatic batch determination, FIFO, LIFO, and FIFO methods. Check it out. Also, if you don't want to miss any of these videos again, please subscribe and turn on notifications.
Hello and welcome back to another weekly video. Today we will talk about SAP Inter-company STO Returns. As you may know, we have already covered the topic for intercompany STO in our series, so you can check that video in the playlist. So we are not going to explain all the details and settings for the normal STO, as you can see that in the other video. Today we will focus on the settings and the details for the return of the STOs. So when we have a normal STO, we will have a buying plant and a selling plant. The buying plant will create the PO, in this case an STO, and will be visible in the sending or the supplying plant. In the supplying plant, then an ATP check will be performed, and based on the availability, there will be a confirmation in the STOs. Then, when the goods are confirmed, a delivery will be created and the goods will be sent. So, in the selling plant, we will have a good issue, and then when the receiving plant receives the goods, they will post the good receipts. And after this process, then we will have all the billings and invoice verification. All this was already explained in the other video. But then what happens if we need to make a return? The return STO is exactly the opposite of the STO. Here, the flow of the goods and the payment is in the opposite direction. This is primarily used to return goods into the original plant. Return can take place from receiving plant to supplying plant due to various reasons. For example, if the product is defect or if it is damaged. For example, here we have plant X, that is the original buyer, and plant Y is the original seller. Okay, so at the beginning, plant X create an STO to plant Y, and then they receive the goods. Now let's say that plant X wants to return those goods to plant Y. So plant X will create a return STO, and this will be done in plant X and linked to the vendor that is linked to the plant Y. Then based on this STO in plant Y, they will create a return delivery. And this is delivery type NCR. That is different from the delivery type that we normally use for the STO. In this case, also another difference with the original STO is that we will have to switch off or turn off the ATP check, the availability check, for the item categories include for the delivery type NCR. Because here we do not need to do an ATP check in the supplying plant, okay? Because the goods will flow from the buying plant to the supplying plant. So once we have the delivery in the selling plant, then based on that document, we should decrease the stock in plant X, and this will be with the negative good receipts. And you will see this will be converted automatically to a movement type 161, like a return. And then when the goods are received in plant Y, also based on the delivery, we will post good receipts and the stock will be incremented. Also, after the stock is received, we will have the credits and debits for the billing and invoice verification. So now let's see all these details in the master data and the customizing. Okay, let's start with our customizing. So we are already in our IMG. And first things is to set up in material management, purchasing, we have purchase order, and here we have returns order. And we have returns to vendor and store return, return plant to plant. And this is the option that we have to set up. So here, by document category F, it's a PO document type NB, and the supplying plant, in our case, supplying plant will be 2000 and buying plant will be 1100. So for this combination, we had to set up the delivery type, and the delivery type for returns cross company is NCR. So NCR will be our delivery type for returns cross company. So then we have under logistic execution, we have shipping, and let's take a look at the delivery type. So we said that we're going to use NCR, stock transport returns cross company. This is the one. And we have the item categories for the delivery. In this case, it will be NCRN, again for cross-company returns. Okay. One important thing here that you will see is the availability check is turned off. Okay, this is very important. Okay, so you can do it from here, but there's also another point in customizing. So delivery item category is NCRN. And then we need to define the item categories determination. So for our delivery type, NCR norm, okay, with V, we have the item category NCRN. These settings are standard, okay. Good. And also, as we mentioned before, here in basic shipping functions, we have the availability check and transfers of requirements. So under availability check, you have the determined procedure for each delivery item category. So in the item category NCRN, you see that I turn this off. Okay. In standard, this is not turned off, so you have to switch it off. Okay. Okay, and there is also another settings that we need to do in sales and distribution, in pricing control. We have defined pricing by item category. So here we have to activate the cost, okay, for our item category. Okay, in standard this is not activated. So for the determined cost, we need to set this up so the cost will be calculated. Okay, this is all the settings that we need to do specifically for the returns. Okay, we are not covering the normal settings for STOs. Okay, this was already done, as we mentioned in the other video. Now let's go to master data section. Let's talk about our master data for this scenario. So we have already created a material master, HT1000, and we will be using as a buying plant the plant 1100. Okay, you see this part already is created here. Okay, and then also the selling plant will be, the buying plant is Berlin, and the selling plant will be Heathrow, UK. So the material also exists in plant 2000, and we have the sales views also, distribution channel 2000, sales organization 2000, distribution channel 12. We have all the fields to determine shipping data. So this is the part that we will be using between plant 1100 and 2000. Then let's take a look to our parts, the plant. We have the shipping data. So for the buying plant, Berlin, we have the customer 300 to 215. This will be our customer for the buying plant. And then for the supplying plant, we will have a vendor. So the vendor will be 3175 in purchasing order 1000. And we see that this is linked to the Heathrow plant, plant 2000. So, okay. And we also have created an info record for our part and our vendor in plant 1100. Okay. So now let's go to the detailed process. Let's start with our detailed process. So first of all, we want to check that for this part, there's no stock in plant 1100 and 2000. Yeah, there's nothing. So first, to put some stock, we are going to create the normal STO, and then we are going to make the return. So for our part, let's just buy 1 unit from 11,000 to plant 2,000. I'm not going to go into details, okay? So we have our STO. Let's go in change mode. The end of the lead time is on the 7th. Okay, so we got the confirmation, okay, as requested, but we know that we don't have stock. Okay, so next step is to put some stock on the supplying plant. So let's do this without reference. So for our part, let's just put 1 unit in our supplying plant and storage location. Okay, so now we should see 1 unit in unrestricted stock in plant 2000. And you see that with the normal STO, it is possible to perform an ATP check. Okay, also I want to show you, as this will be different in the returns, like the standard layout, okay, we have the delivery address as the buying plant. This is Berlin, okay. So Berlin is buying from Heathrow. Okay, so now let's go and create the outbound delivery. Plan 2000. And here we have our outbound delivery. So we have our outbound delivery. As we are not using WM, we can pick it from here. So this is pick. And let's do the good issue. Okay, good issue is done. Okay, you have the picking and the good issue. As the good issue was done, we can see the stock in transit, MB5T. For our part in receiving plant, we have 1 unit supplying plant 2000 as stock in transit. Okay, let's suppose now that the goods arrive. So we can perform the good receipt based on the PO. In Berlin. Okay, done. So now this unit that was in plant 2000, now it moves to plant 1100 in Berlin. So let's go to the display the PO. We have the PO history, delivery note, good issue, and good receipt. Okay. So on the selling side, we should perform the billing based on the delivery. Okay, billing is done. And then, so let's pause the invoice verification for our PO. Remove the VAT. We can do simulation. And we can see that we are debiting the GRAR and we are crediting our vendor so it can be paid later. Okay, so now Let's take a look at our view history, and we have the delivery node, the good issue, the good receipt, and also the invoice receipt. So the normal STO process is now finished. And we still have our 1 unit in the buying store location. Now we have to return this unit from Berlin to UK. So let's go and create a new STO for the same part and quantity and plant. And the difference here is that we have to flag the return item. Okay, this is the only difference. You can see that the shipping data is still determined in the same way as in the other one, but now you can see that the delivery type that was determined is NCR. Okay, so this is the difference. And we also mentioned in the delivery address, okay, here you will, as normally it is coming for the buying plan, you will need to change the address that you have for the supplying plant. Yeah, in my case, it's 3767. You can, at least what I've done to search for the address, it's just to check in ADRC table, and this is the address of the plant, okay? As there's no address at store location level in the customizing. Good, so now we can save the return STO. Also, what is another difference here is that if we select the item and we want to perform an ATP check, you see that the ATP check is off. Okay, this is also based in our customizing. And if we now take a look at the print preview, now you see that the delivery address will be in Heathrow, okay, in UK, so no longer in Berlin. Okay. So good, we have our return STO created. So now let's go and create our delivery. For our return STO. And we have this one. You can see this is NCR, okay, from plan 2000, okay, plan 2000. Before saving this one, I want to double check again in the stock in transit was removed when we made a good receipt for the normal STO. So for this part, there's no stock in transit at the moment, okay? So what we have to do here, now that we have the delivery, is we have to send the goods from the buying plant. So it will be good received based on the outbound delivery. And you will see that the movement type is automatically changed to 161. And we are taking it off from store location 0001. So this is posted. So now the 1 unit here should be removed. Okay. And we can take a look again now at the stock in transit, and we have again 1 unit in transit. Okay. Now let's suppose it already arrived to the supplying plant. So now they have to post based on the delivery they will post. It's not a good issue, but a good receipt. Okay, let's complete the storage location. So it was saved. And we can take a look again at our stock overview. Now we should have the unit here in Plant 2000. Okay, and the stock in transit now should be gone again. Okay, so now we move the goods for the return from one plant to the other, and we should complete the same transaction for the billing, this for the 76. Yes. Now it will be IG, internal credit memo, okay? Before it was IV, okay, for the Interco invoice. So this is done. And then we should also do the same way a credit memo for the STO was the 80. Okay. So now we do a simulation. We can see that now the GR/AR is credit and we are debiting the vendor. So this is compensate with the original STO. So now we are saving the credit. In the meanwhile, we can take a look again at the PO history of the new return, the 80, okay? So we have the delivery note, the good issue, the good receipt, and the credit for the invoice, okay? So this is done.
Have you enjoyed this video? If so, please give a like, share, subscribe, and turn on notifications. I will see you next time. Bye.